Welcome, viewers. On behalf of Iravati Research and Communication Center, or IRCC, this is your host, Pratim Ranjan Bose. I have with me Mr. Subhendu Moitra, founder director of Course Advisors. Together, we will discuss India's improving growth prospects. Mr. Mitra, fiscal year 2023-24 didn't start in a very encouraging note. The global trade was slowing down, impacting Indian exports. Crude prices escalated throughout the July-September quarter, which means added pressure on import side. The terror strike by Hamas on Israel and the retaliation by Israel added to the global tension. From the Indian perspective, this was the most difficult year for diplomacy, with direct or indirect impacts on the economy and trade. India-Canada diplomatic row, and now Qatar's death penalty on 8 Indian Navy veterans. The emergency scenario in Israel may also impact on the rising bilateral trade and investment. Having said that, there are some good news, both globally as well as with respect to India. Globally, crude prices declined from $91 billion a barrel in September 27 to $77 billion a barrel in November 7. After sustained fall during April-July 2023, India's merchandise exports reported growth year on year in August. Factory output remaining strong after some heavy beating due to FPI outflow, markets stabilized. In October, IMF upped its annual growth forecast for India marginally to 6.3%. World Bank kept it stable at 6.3%. But the most interesting thing that had happened was RBI Governor Shaktikanta Das recently ignited the expectation for a better than expected GDP number for the July-September quarter. To quote RBI Governor, looking at the momentum of economic activity, looking at a few early data points that have come in, a few early indicators, I can say that the second quarter GDP number, as and when it is released at the end of November, in all probability will surprise everyone on the upside. Clearly, we can expect something substantial here. That said, I will request Mr. Moitra to give his views on the growth expectations of the Indian economy this year. What sectors you believe, Mr. Moitra, could have done outstandingly well in Q2, considering that it is the monsoon season when the much of the employment generating activities like construction, and which is also a major growth engine, remain subdued. And if Q2 surprises us, should we expect better than an even better Q3? Your inputs, I'll also request you to give some feedback on the market. What are the upside and downside risks that you see, and which sectors should do well? I mean, obviously, we are talking in maximum 6 months span. Over to you.
Yeah, thanks, Mr. Bosch. It's a very interesting time we are going through. We can see that international situation is very, very volatile and ever-changing. The geopolitical situation is just shifting across a couple of months itself. It's becoming very unpredictable. But given the scenario, as you very rightly said, growth-wise, India is doing extremely well. Actually, if I've seen the last G20, it was said that India is expected to be the fastest growing nation in 23. It's actually happening in that way. And what Mr. Das has said is a reflection of what is happening in the country, especially the growth paradigm of the economy, I would say. But see, this growth also, if you see, of course, the second quarter number is not right now published. It's expected, it's to be better. But what you can see, actually, the first quarter detailed analysis is already there. That's April, June. If you see the GDP growth, April, June was 7.8%. And compared to 6.1% in January, March 23. So that itself was a very huge uptick, which is a very natural. Normally, April June is always very high, and projection for this quarter was actually much lower at 6.2 or 6.4%, and it's expected to be more than that. If you have seen that even the this IMF and World Bank, they have all changed actually upgraded our GDP growth numbers. And IMF is, if I'm correct, they are saying that it is to be 6.3, 6.4 at this moment, which is initially much lower earlier. Uh, this is one of the paradigms. If you just see the what are the particular sector you asked, which are the particular areas there is a growth. I mean, almost every particular area is actually growing at a very healthy rate. If you see the gross domestic fixed capital formation, it just remains strong at 8% in April June. I'm saying because we have the numbers till then, and as against last year's of 8.9%, so which is quite going strong.
So
Growth
fixed
is
capital
quite
gives
high.
us the indication of investment.
Yes, that's what. That's very indication. So that shows that this is going to be sustained in future. Private consumption is growing at 6%. Again, in April, June, I have the number, which was 2.8% year to year earlier. So it's quite a very high growth. So there is a buoyant economies. One of the indication is the private consumption. Construction output rate high is 7.9%, which is around 8%, which is pretty high as such. You can see January, March was also very high, around 10%. So if overall there is a growth, even if you see the service sector, very healthy growth is happening in service sector, especially if you look at the output in financial, real estate, and professional service sector. It's at 12.2% in April June, and if you see the other part of the trade, hotel, transport, communication, it's at 9.2%. Very very strong, growth. Manufacturing growth, if you told me, though, I mean, it's doing well, but I think it's still much more moderate at 4.7%. So the fixed capital formation has not so far converted to manufacturing growth right now. We may expect it in future. So in April, June, it is 4.7%, and compared to 6.1% in April, June of 22. Of course, there the base was much lower. We have to see the 23, the base itself is quite high. So 4.7% is not a bad number, but I mean, it could have been better. That's what I can say. Uh, Other indicators, if you look at, the demand supply gap. Steel production rose by 11.9% in April June.
Mhm.
Consumption also rose by 10%. Cement production went up by 12%. So I mean, these are the basic indicators. Even coal went up by around 8.7%.
Coal is doing extremely good.
Extremely
Coal and
commercial
power.
vehicle.
Coal and power.
Yes,
Power demand is growing almost at 10% level for last 2 years.
exactly. And last year, especially 22, 23, if you see even the both the vehicles, of course, this year's numbers I don't have so far, was 34%, and private vehicle was about 18, 19% growth. So, I mean, what I'm saying that overall the
The
growth,
recent data packs say that FMCG growth is pretty buoyant.
yes. So my point, what we want to conclude is that overall the growth, the way it's moving is, I think, the domestic demand which is pushing the growth, and you can see the market wise it is also overall. If you see what is happening in the retail market, the sale, the Diwali sale or the Dasera sale, numbers are much more higher than corresponding period last year. Or you can say that this is the first time after the Corona, pandemic. We are getting a proper festival, a full fledged festival this year, but the growth is pretty. What numbers are quite strong. So given that, we can expect it to continue that way. One particular point is, when you have these international issues, the share market is sometimes behaving in a different manner because of the international investments. And if you look at the another number, which is very interesting, is that if you see the FDIs even 22,
And in
23
fact,
was lower.
if I may interject here, is that there has been a lot of talk in the town about China suffered after many years or decades. For the first
Yes,
time, the FDI shrunk in the
right.
last quarter.
Exactly.
So,
So our
so
FDI is also come down, not so much, But
No,
if you
for them
compare
it has declined. They have never suffered. It has always grew.
that,
So
that's absolutely.
there is a some expectation that FDI will actually come to India.
Yes, so that is one part. But what I'm saying that overall, international affinity to investment with the money, there is a issue because of the geopolitical situation. Of course, there is a propensity to come to India, no doubt about it. But overall amount available for the investment has effect. Whenever they are going to gold or other areas where during the war time or during such uncertain time, there is always a tendency to move to certain other kind of category of investment which is happening. uh, what actually may have helped us is a very balanced position in foreign matters. I think that is what is helping us. So we are not affected to the extent in various other countries who are in particular, one side or the other. So we have more or less balanced the things, irrespective of a lot of issues there itself, including the Oman issue, as you said, is a very, very
Qatar.
sorry, Qatar issue. It's a very, very challenging, political scenario. I mean, anyway, foreign matter is there, but still, I would say that given every other issues, it's a pretty easy that we have we have done it very well in this particular matter, and that may have helped us to some extent not getting affected as compared to various other countries who have affected more badly during this scenario.
Yeah. So if we just put it, one dampener for this year was the election is coming. So we can expect things to slow down a bit, attention to get diverted sooner than later. It is already November. So election will probably start some March or April, right? It will be an 1 or 1.5 month affair. And already due to the state elections, there is some. But despite that, if we can sustain good growth till Q3, that means, and I think we should keep a check on the fixed capital formation side. So that will give us some kind of, I should say, we can start the next fiscal irrespective of the election with a lot of hope, isn't it?
Yeah, actually, that is one of the worries. I might have missed that. Q3, I don't have much of issue. Q3 we should do well. If you see the RBI's Q3 data projection is, I think, 6.1. Q4 is around 6%. I think we should do better than that. I'm sure. Q4 there may be an issue because though you believe that it's in March, but I have a I just am worrying that that effect may come right from January. So the 6 months, that is Q4 of this fiscal and Q1 of the next
Next
fiscal,
fiscal.
we have to be very cautious. How do we handle it? Because we should look into, of course, market wise. The general consumption wise, it may be good actually. It actually election time that because there are a lot of expenditure happens on campaign and other things. But overall, the growth in the real sectors, like for example, manufacturing or something, there is always some effect because the orders are sometimes get stuck or something. So that is one of the worries we have, and we may have to suffer a bit. How we can reduce our the effect or the negative effect of that, that's important. So every industry or every other experts or even the government should look into that. That effect is not so bad, especially given the current international scenario. We need to build and continue this momentum of the growth.
Right. And do you have any last take on the market?
Well, market will continue to be volatile like that,
Mhm.
and because there will be situation where people will take out money from this market and go to other market, those issues will continue. But you might have seen that Mr. Das has also given one very particular interesting thought on that, not on the market, and especially the interest and inflation. They said that our efforts of controlling them are very little to dependent on the international numbers. Now, what are the rate of interest of the,
In
because he
fact,
was asked
there has been the
US.
chief
Yeah.
economist has also come out with he's saying that it is more delinquent from US Fed to
Yes.
Indian
So
interest
US.
policy rate. So what it means is that even if US goes for a rate hardening or
Yes.
continues the high rates for a longer period, India has some kind of roof,
Cushion.
yeah, cushion
Cushion
to
against that. Basically, the
push
our
growth.
inflation is in control. Our inflation is in control, more or
Hmm.
less. It is in within, not exactly what they would have
No,
loved,
it
but
is
nearer
within
to
the
the
guided range.
range.
Yeah.
Yes. So
Yes.
given that, I think that is one strong part of it. But I even with that, this kind of sudden market wise investment going out of the FPI is going to the different market or coming back, shifting to the uh, from equity to the bond market. Those things will continue given the geopolitical scenarios and position of various countries. So we have to bear that. But overall, if you see the overall wise, the market may be moving balanced way. There may not be much up and down. Overall in a given a range, I think it will be working flat. There will be some up and down in between. That's what
So
I
it will
feel.
move within
Yeah,
a range, and overall
yeah.
it will remain stable.
Remain
That is what
stable.
you.
I would say remain stable. Though I would have given this growth. Actually, it should have grown much faster. This period also, it could have happened, but because of the international geopolitical scenario, I don't think that the growth which would have come will be there actually in this type of
Yeah.
market.
Yeah. A lot of for 6 months things will
Yes,
definitely
yes,
suffer. Definitely
absolutely.
suffer, and particularly from March to June, that
Yes,
period,
absolutely.
it's
It's going. It's going. Is going to be the problem, especially our election also time. Normally, there's a volatility, so we have to bear with all this.
and there is one another downside is that during inflation election, normally the inflation goes up because a lot of cash circulation in the economy. So
Right.
if suppose inflation is now down to 5%, so just below the ceiling of 6%,
Mm.
so that means that there will always be risks that it is crossing that ceiling in case of and
Yeah,
hopefully.
yeah. That risk is there. So this is what everybody has to control. All the controllers have to all control the cash circulation of the economy. I only pray that that doesn't require increase in the rate of interest. That would not be
In fact, it should
that
be
may affect the
otherwise.
market.
Rate of interest, it is
Should,
to fuel growth, rate of
yes,
interest must go
should,
down.
must go down. It may not go down immediately. It'll take, I think the interest rate and even if you see the interest rate and our currency are actually moving very stably. Compared to other countries, we're in a much stable situation, both of interest rate and the currency that way. So
Right.
I hope it continues that way.
Thank you very much.
Thank you. Pleasure.